Hey everyone, welcome back to the channel. This week we're going to do 4 videos on P&G. The first video this week is going to be about the company and calculating their WACC. Second one we'll do some revenue projections. We'll have a third video looking at their margins and OPEX, and then we'll pull it all together into a DCF. So let's go ahead and hop on over and do a little overview of the company. If you're not familiar or only partially familiar with P&G, they're one of the, if not the largest CPG companies. Founded in 1837, currently traded about $135 a share with a market cap of $330 billion. And let's take a look at some of the brands they own, and you'll quickly notice that you probably recognize just about every single one of these, and a lot of them are category leaders. Something to note is for their financials, they report out in 5 segments. They have beauty, grooming, healthcare, fabric, and home care, and then baby, feminine, and family care. So, pretty interesting stuff there, and a lot of these brands will translate over into those. So if we quickly look at the market share here, and just as a note, all this data came from their 10K, so this is based off their internal kind of research that they've done. But you can see they're a market leader in just about every category, especially in like the razor market, right? 60% there. Skincare looks to be actually their smallest at 6%. And then adult incontinence, so like adult diapers, 10%. So, but most of these, right, they have about a quarter, if not more, of the total market for that category. Pretty impressive stuff. So let's go ahead and hop on over and look at how we calculate their WACC. So just for reference, we use CAPM here to calculate the cost of equity, and then we use WACC to calculate, obviously, the discount rate here. If you're not familiar with how to calculate these, I have a lot of videos on my channel showing how you can pull all these numbers together. So definitely feel free to go look through the channel and find another WACC video, and I'll go through where all these numbers come from. But ultimately, we end up getting a 4.5% or 4.2% weighted average cost of capital. And, I think this seems very appropriate for kind of a large market leader. My thought process here is they're going to continue to have kind of a low, probably single to mid-digit growth year over year, and they're going to have pretty stable margins. Unless if there's some large catastrophic event, I think that, it's a relatively safe company, and having a low cost capital makes sense. And with the beta of 0.4, I think that's reflected there that, they don't really move too much when the market is really moving. They're just kind of a slow growth company at this point. They're a real big cash cow, basically. So that's what we have today in this first video for you. In the next video we'll have coming out tomorrow, we're going to be looking at forecasting their revenue. And once again, thanks for watching. Let me know if you have any questions or comments below, and I'll get back to you. Thanks.